Welcome and thank you for attending today's technical assistance webinar. The webinar is presented by Amity Foundation, acting as the third-party administrator for LA County's Justice, Care, and Opportunities Department and the CFCI Care Grants. The CFCI, or Care First Community Investment Grants, are the result of ballot measure J, voted in by LA County residents in 2020. Care First Community Investment Funds are intended to be invested directly into communities and alternatives to incarceration that address negative outcomes caused by racially driven criminal legal system inequities and long-term economic disinvestment. Today's webinar is being recorded. You do not have to be on camera. Understand that if you are on camera, your image may be captured in the recording. Staying on the webinar represents your consent to being recorded. Please note the following legal disclaimer, also available on the bottom left-hand side of your screen. The material presented does not constitute legal advice and is only intended to provide information. Organizations and individuals should independently verify that any information presented is appropriate or applicable to their situation before acting on it. Next slide, please.
Right, so at Amity, we incorporate teachings that center the community before we begin our work. Today, we will use the LA County Land Acknowledgement to recognize the price paid by individuals that has resulted in efforts, such as the Care First Community Investment. We recognize that we occupy land originally and still inhabited and cared for by the Tonva, Tatavi'um, Serrano, Kizh, and Chumash peoples. Today, we honor and pay respect to their elders and descendants. We acknowledge that settler colonization resulted in the genocide of the First Peoples. This acknowledgement demonstrates our responsibility and commitment to truth, healing, and reconciliation, and to elevating the stories, culture, and community of the original inhabitants of Los Angeles County.
Again, thank you for attending today's technical assistance webinar. We are going to talk about the scary audit process that does not have to be so scary. Just a general reminder that the audit process is usually standard with government grants. You will be audited. You will be audited every year of your grant. Sometimes you are audited quarterly or bi-yearly, but it is a standard process. There are ways to prepare for it before the onset of panic that you indeed will be audited, and we hope to prepare you today for the audit. The audit journey is what we're calling it, the audit journey. My name is Rebecca Gray. I'm the grant administrator for Amity's third-party administrator. Ms. Mina?
Yes. Hi, everyone. My name is Mina Carrion, and I am the Training and Technical Assistance Coordinator. So today we'll explore the practical strategies and essential tips to ensure your organization is well prepared for an audit. As Rebecca said, everyone goes through an audit, so it's very important that you know what is needed to complete it. So some key points for any audit is the following. So first is definitely understanding the audit requirements. So the first step to passing an audit is understanding the specific requirements. Familiarize yourself with the criteria set by the auditing individual. This includes knowing the scope of the audit, key compliance areas, and any relevant regulations or standards. You also want to have all of your documentation organized. So we've always said, to keep a folder, put all of your receipts, keep your records up to date and easily accessible. This includes your financial statements, your policies, your procedures, and any other relevant documents. I really encourage you to use digital tools in order to help streamline your document management. You also want to implement robust internal controls and procedures. Regularly review and update your controls in order to ensure that they're effective. Conducting internal audits to identify and address any weaknesses before an official audit is extremely helpful. You also might want to educate your staff about audit processes. Remember that their role is crucial to also maintaining compliance. Regular training sessions can help ensure everyone understands the importance of accurate record keeping and adherence to policies. Communication is extremely important, not just with the people who will audit you, but also with your staff. Establish clear and open lines of communication with your auditors. Prepare your team to respond to them and to their inquiries promptly and accurately, and transparency and cooperation can greatly enhance your audit process. So, before I would really recommend also conducting a pre-audit self-assessment. This can help identify any potential issues and allow you to address them before the official audit. Use checklists, mock audits to simulate the audit experience. And always be open to improvements. View the audit process as an opportunity for continuous improvement. Use feedback from auditors to make necessary adjustments and enhancements to your processes and controls. Passing an audit is definitely achievable. You can do it, we can do it, everyone is able to do it, right? However, it does require careful preparation, organized documentation, and a proactive approach to compliance. By following a few steps, your organization can confidently navigate the audit process and demonstrate its commitment to excellence.
So speaking of a self-assessment process, here's a fun little game that we're going to play today. We're going to have, the next slide is going to show the answers to these true or false questions, but you can follow along here with these questions and think to yourself what you would answer, and we will go over the answers in the next slide. True or false, preparation of financial statements is the responsibility of the auditor. 2, audits are only undertaken to examine financial statements. 3, a private nonprofit organization receiving federal funds is not impacted by federal standards governing cost principles and fiscal management policies. 4, sound internal controls cannot prevent all instances of waste, fraud, and abuse. 5, accounting policies and procedures do not have to be written as long as the staff is aware of them. 6, tax-exempt organizations must file tax returns. 7, only an organization's management has legal and regulatory responsibility for fiscal management of grants. 8, organizations have follow-up responsibilities on financial statement and/or compliance audit findings. What are our answers, please?
So, how many of you answered true and false to the following questions? So let's go through them again and make a note of what you had answered. So if you answered false to preparation of financial statements is the responsibility of the auditor, you're correct. Also false is audits are only undertaken to examine financial statements. A private nonprofit organization receiving federal funds is not impacted by federal standards governing cost principles and fiscal management policies. That is also false. Sound internal controls cannot prevent all instances of waste, fraud, and abuse. That is true. Accounting policies and procedures do not have to be written as long as the staff is aware of them. That is false. Tax-exempt organizations must file tax returns. That one is true. Only an organization's management has legal and regulatory responsibility for physical management of grants. That is also false. And the final question, organizations have follow-up responsibilities on financial statements and or compliance audit findings. That one was true.
We're going to go over the three types of audits. The first type, the most familiar one probably to people, is the financial statement audit, and that is usually confined to your financials. But there's also a compliance audit, and there can be an operational audit. A compliance audit, and again, we'll go in detail in the future slides, but a compliance audit is more about, does your organization have all of the paperwork in place to legally operate? And or are you in compliance with some of the terms of your grant contract? And an operational audit is, are you doing the things that you said that you were going to do under the auspices of the grant? Next slide.
So, financial statement audits. This one is really defined as an independent examination of the company's financial statement and its disclosures by auditors. It provides a true and fair view of its financial performance. So the auditor ensures that the statements are in accordance with the framework of filing after a thorough check of the statements of the company. So the balance sheet, the income statement, statement of retained earnings, and cash flow statement are the four major parts of the financial statement audit process. These statements are scrutinized to ensure that no material errors are made and comply with filing regulations. A financial statement audit is the process of scrutinizing the most important statement of a company, such as the income statement, cash flow, as I mentioned before, and the balance sheet. So let us understand the most important documents an auditor scrutinizes before submitting their financial statement audit report. So we're going to go through each one individually. So the income statement is the statement of a company's financial performance over a specific accounting period. It not just shows your revenue, but also the expenses incurred through operating and non-operating activities and net profit or loss incurred during this period. If you're not familiar with your balance sheet, this one is your financial position at any specific point in time. It is done by detailing the assets, liabilities, and shareholders' equity to give an idea of what the company owns along with the liabilities. So the balance sheet is prepared based on the idea that assets equal your liabilities plus the shareholders' equity. Your cash flow statement, this one is the statement of the company's cash and cash equivalents during any specific accounting period. And all of these financial statements are the ones that are often used for this specific audit purpose. However, some adjustments might be made to the statements by the company after the finalization of the audit for a better representation of facts in the financial statement audit report.
The next kind of audit is a compliance audit. And I just want to make a note for everyone listening. Not all of these components are required every time. If you're going to be audited, an auditor will reach out to you and you will receive a letter detailing every single thing that you need to have for the audit. So these are good to knows, things to prepare for, so that when you are audited, if you have a government grant, you will be audited. When you are audited, you have everything in place. So a compliance audit. These are the formal evaluations or assessments of an organization's adherence to frameworks and or regulatory requirements. Compliance audits are conducted by independent audit practitioners and must have the following characteristics. They are based on frameworks or regulatory requirements such as laws, your state's laws for nonprofits, things such as that. They evaluate an organization's posture in depth based on the guidance and requirements of the target framework or compliance regulations. So again, you're being compared to a set of laws. They are performed by an independent or third-party auditor. You usually are not in charge of your own compliance audit. Somebody else will come in and take a look for you. This compliance audit results in a final deliverable like a report, assessment, or audit opinion. During a compliance audit, businesses should expect to go through interviews about internal controls. You will likely be asked to provide documents or evidence to show that you are walking the talk in carrying out compliance requirements. Auditors must meet their own standards, exercising their judgment and professional skepticism with the aim of reaching reasonable assurance that an organization is conducting the activity stipulated by the target framework or regulation. What is the purpose of a compliance audit? A compliance audit gauges how well an organization adheres to rules and regulations, standards, and even internal bylaws and codes of conduct. So are you following your own bylaws or codes of conduct? Part of an audit may also review the effectiveness of an organization's internal controls. Different departments may use multiple types of audits. For example, accounting may use internal compliance and operational audits. Audits may be required by different levels of government. There are a lot of compliance frameworks and regulations out there and a lot of corresponding audits. Organizations should identify their own audit priorities by asking these questions of themselves. Which regulations am I required to perform compliance audits for? Are there any compliance audits required by our partners or customers, meaning that you would have to go out and secure your own auditor? Are there any compliance audits available that would benefit the organization? Looking toward the future, are there any compliance audits that might be required or might be desirable for the organization? So no matter where you are in your compliance voyage, whether it's your first or your 100th audit, preparedness, leveraging technology, establishing a culture of risk accountability are the keys to success. Next slide.
So now we're going to talk about operational audits. So an operational audit is the type of audit service that the review is mainly focused on the key processes, procedures, system, as well as internal control, which is the main objective is to improve productivity as well as efficiency and effectiveness of the operation. So the operational audit has targeted the leak of key control and processes that cause waste of resources and then recommend for improvements. Operational audits is part of an internal audit, and their main aim is to add value to any type of business with their professional services. Systematic and highly disciplined helps ensure the operational audit adds value to the organization. So the key purposes of an organizational audit are to identify inefficiencies. One of the primary purposes is to identify areas of inefficiency in an organization's operations. By reviewing the organization's processes, policies, and procedures, auditors can identify areas where the organization wastes resources, time, or money. For example, an operational audit may identify redundant or unnecessary steps in a process or equipment not being used to its full potential. Another purpose of an operational audit is to improve efficiency. So, as I had mentioned before, it can recommend how an organization can improve its efficiency. So it may involve streamlining processes, reallocating resources. It may recommend how the organization can reduce costs, increase productivity, and improve its overall performance by implementing a number of recommendations. Also, increased compliance. So operational audits also help ensure that an organization complies with regulations, policies, and procedures. By reviewing an organization's operations, auditors can identify areas where the organization may be at risk of non-compliance and make recommendations to improve its compliance. For example, an operational audit may identify a need for additional training to ensure employees follow the organization's policies and procedures. An operational audit can also help improve risk management. So by reviewing the organization's processes, policies, procedures, auditors can identify areas where the organization may be at risk of fraud, errors, and other issues. By making recommendations to address the risks, the organization can improve its risk management and reduce the likelihood of adverse outcomes. It can also support decision making. in ways of giving reliable information about the organization's operations by identifying areas of inefficiency, recommending improvements, and identifying risks. An operational audit can provide decision makers with the information they need to make informed decisions about the organization's operations. So overall, an operational audit aims to objectively and systematically evaluate an organization's operations, identify areas where it can improve efficiency and effectiveness, ensure compliance with regulations and policies, improve risk management, and support decision making. By conducting these types of audits, organizations can identify improvement opportunities and make the necessary changes to achieve their objectives. So these types of audits involve the following, the process can involve the following. So definitely planning the audit, you conduct a preliminary review, you collect data, you analyze the information, you prepare the report, and then you follow up on the report's findings. By following this process, organizations can identify improvement areas and make the necessary changes to improve their operations, increase their efficiency, and ensure compliance with regulations and policies.
So relating to a question we had in the chat, how does this process play out? The first thing that happens is you will receive a notification. Usually it's an official letter. I have seen them delivered by email stating that you will be audited during a particular time frame. So you're given kind of a due date for when the audit is going to take place. Once the audit is scheduled, you will receive a list of items to have ready during the audit. They will call this a PBC, a prepared by client list, PBC. You will receive an audit report at the end of the process with any findings, recommendations, and required follow-up. So audits can result in process improvement plans, in which case you will be given a timeline to make certain improvements. Next slide.
So getting ready for an audit checklist. So assemble your team in one location, journal and gather everything that is needed. So the journals that detail the organization's business transactions and affected accounts, ledgers for the fiscal year that are being audited, your bank statements, your canceled checks, your payroll records, tax returns, your IRS forms, more IRS forms if you filed 990Ts, 990s, your invoice and your paid bills, so any and all receipts, and the receipts for your credit card transactions as well.
After you've assembled all the documents in one location, you should have organized and readily available all corporation or organizational documents, such as your, if you're a nonprofit, your 501c3 letter stating legally that you're a nonprofit and when you legally receive that designation from the federal government, any policies related to financial management and controls. So again, you are supposed to have written down all of the policies and procedures you follow as an organization in all of your activities. You'll need your tax exemption letters, any board or committee meeting minutes. Often auditors want to take a look at all of your grant proposal contracts, your commitment letters, contracts with funding sources. Your final reports submitted to funders can be very helpful for auditors. Any contracts you have with vendors, any leases that you have, equipment maintenance agreements, and insurance policies, including policies for office contents, professional liability, etc. Next slide.
So, reconciling all bank accounts. Why is this important? So it shows the responsibility with cash and cash flow planning. So it's definitely needed as well.
And finally, in your getting ready for an audit checklist, you should prepare a trial balance, which is a report at the end of the accounting period that ensures debts equal credits. So trial balance. an accounts receivable schedule, an accounts payable schedule, depreciation schedules, expense account analyses requested by your auditor, schedules of prepaid expenses for upcoming fiscal year, a list of fixed asset additions and dispositions, and/or investment activities. Next slide.
So after the audits, so what happens after you completed everything, and you may wonder what to do after receiving your audit report. So you can take several courses of action depending on the auditor's findings and whether or not you agree with them. So after you receive an audit report, you can assess the auditor's findings and determine whether or not you agree with their assessment. Then you can gather important documentation and respond to the audit findings. So reading and analyzing those findings in the report are really important, and doing it immediately when it arrives. The report will contain key findings and recommendations that you will be able to recognize or dispute. So using the report to determine around your internal controls compliance, and using a separate document will contain possible grievances that the auditor may have with your internal controls. You will also receive recommendations for improving controls. By analyzing the report, you can verify its contents and determine if there are any items that you need to dispute. The key decision makers should read through the report and provide feedback about the auditor's findings and the methods the auditor used to assess your business. You should also compile necessary documentation. So gathering relevant documentation is an important next step after reading through the audit report. There are two reasons to gather documentation after the audit. And one is, well, there's many types of financial documentation that aids auditors in their processes. So you'll be able to provide these documents at the start of the process, but the auditor may request more in their report. So you may want to gather relevant documents after reading through the auditor's findings to satisfy their requests. You will need various financial documents if you disagree with an auditor's findings. So gather those financial statements, the compliance verifications, expense reports, governance documents, anything to prove your financial information and to support your claims. Deliver a response. Any audit reports to your business warrant a written response from you and your organization. The contents of your response depend on whether or not you agree or disagree with the findings. If you agree with the findings and recommended solutions, you can respond and confirm. Otherwise, you can always dispute the auditor's claim. So what to do if you do agree with them? It's really simple. You agree, and the next steps are readily good. You go on with their recommendations and you move forward. If you disagree with the conclusions of an audit report, you can oppose the auditor's conclusions by stating your disagreement with the audit response and reasoning to back up your statements. So you can write a dispute, carefully assessing your records with proof that counter specific claims. You can write a detailed response that show how your processes followed specific regulations, guidelines, and using clear and concise language to further dispute. And then finally, follow all recommendations. So whether you agree with the auditor's findings or come to a mutual understanding through the dispute process, it's important to implement the final recommendation the auditor provides. Keep note of the specific recommendations your auditor provided and document the processes you use to enact them. Again, paper trails is really important. The auditor can always follow up, so recording your methods will help you prove your adherence.
Well, all right, several people here are recipients of a JCOD CFCI grant. And we have already had an audit process. We've audited, Mina, is it 3 or 4? maybe
It's
5.
5.
So 5. So we have conducted an audit process for 5 recipients of JCOD CFCI grants so far. So you may be there will be an audit process on the grantor side, the folks who gave you the funding. They will look at all of your information with every report you send. They will look through and make sure that they believe that you're in compliance with your contract and in compliance generally. And when questions come up after reporting, if questions come up for the grantor, that is when they will go forward with an audit. Why is a grant audit necessary? So a grant audit is necessary for several reasons. It does provide accountability and transparency. So I can speak directly for the JCOD CFCI grants. This is an LA County resident funded grant. So taxpayer money goes into this grant, and taxpayers want to know how their money is being used. And the government will not give out funds that it cannot account for completely. So one of the reasons that the compliance is so high for this grant is because it is taxpayer funded, and the elected officials in LA County need to be able to speak to the penny to where this money went. So it provides accountability and transparency. It helps the grantee and the grantor, the funder and the awardee. It helps you comply with regulations. It can mitigate risk. So for both the grantee and the grantor, it is a really horrible position to be in after you've received a $1.5 million grant over 3 years, that after that 3-year process and you have spent all of that money, it is determined that you need to return those funds. So if you are not in compliance with your grant, or you're not in compliance with the regulations that govern nonprofits in your state, or any other compliance issues, you want to know before you expend funds. It also helps you evaluate performance. So I was thinking this as Mina was going through some of the previous slides. A lot of these things you can do internally to figure out if you are running as effectively as possible, if you are within the letter of the law, if there's anything that you could get in trouble for. A lot of compliance issues seem like there's something that you're doing for somebody else, but in reality, it is all a self-protective activity. To comply with donor expectations. So when you have to answer to your funder about what your funds are used for, all of that information can be turned around to give your donors information about exactly how you use their money as well. And it increases stakeholder confidence. When you are audited and you pass an audit, all of your partners, your investors, your donors, your staff, the people who come to you for services, all of them feel more confident that you are able to do the things that you promise you can do, and you're able to do them within the letter of the law. Next slide.
So some of these are additional resources that may help you in your audit journey. We definitely recommend looking into these websites, and they are clickable when we do upload the presentation onto our website. So we have come to the end. Let's see if there's any questions in the chat.
I do have some.
Okay.
The first question was, this process is new to many. Will you be sending out an audit assessment or guidelines to follow? So we did intend this whole presentation to be something you can use to prepare for an audit. There's a lot of information in this presentation, and we understand that. We will be making the presentation, a recording of the presentation, the slide deck, and I think a couple of PDFs available to everyone who attended. So you can go over this at your leisure. You can look at the recording on our website. Not every single thing we presented today might apply to you in an audit. Again, you can do internal audits all the time. You can always audit yourself. And there are several, a very popular internal audit mechanism is the SWOT, the strengths, weaknesses, opportunities. Can't remember what the T stands for, SWOT analysis. A SWOT analysis, and you can find, if you just Google that, you can find templates online and ways to go through that process within your organization. You can do it for your programs. You can do it for your accounting department. You can do it. You can do a SWOT analysis for any small part of your organization, or, writ large, like for the organization as a whole. So a good place to look for resources for, what is the audit process? What do we need to get together? On the previous slide, the one with additional resources, any of those are good websites to go to look more into this process and to begin to prepare yourself. But ultimately, should you receive, and this answers another question later on, who will, if you're going to be audited, who is this letter that you receive saying we're going to audit you? Who is it from? So you're going to receive it from your grantor. Whoever it is who funded you, they are the ones who decide whether or not they will audit you. So for instance, when we conducted the 5 audits that we did for a handful of year 1 grantees, the person who's going to conduct the audit put together a letter, and it was sent out on Amity letterhead from the Amity third-party administrator, and it was with regard to this specific grant. So if you're going to be audited, it will be with regard to your specific funding. Whatever institution has funded you, they are the ones who might request an audit.
And the T is threats.
What's that?
The T is threats.
Thank
People
you.
put it in the chat.
Thank you. SWAT. Shareholder equity is net assets for a nonprofit. Is that correct? There was the question. Shareholder equity is net assets for a nonprofit, correct? No, shareholder equity is not the same. Nonprofits don't necessarily have shareholders, so it is called net assets instead. Net assets are the money left over after paying off all liabilities.
And onto your previous question, sorry, Rebecca,
Go
it
ahead.
just came to my mind. For the individuals who do have CFCI grants, the site visit that your grantee conducts with you once a year is a great practice run for an audit. They will be asking you a lot of questions that align with audit questions. So I definitely recommend you to take those site visits seriously. And that tool is available and shared with you on Apricot.
Relevant to that too, there's a question here. Does our Amity rep conduct the audit?
No, your
no.
grant advocate will not conduct an audit.
Yeah, we have a whole separate person to do an audit. This is also JCOD CFCI audit specific. I saw in the contract that data needs to be shared, and Apricot was mentioned. Will we be required to use Apricot, or can we continue to use our own CRM for keeping data? For the JCOD CFCI care grant, you are trained on Apricot. You are given a username for Apricot. You are required to enter your data into Apricot. Question about the audit, and I think this is also JCOD CFCI grant specific. Is the first audit done in the first quarter following the first disbursement? So we will not audit you until we have something to audit. After the first the JCOD CFCI grant is an unusual government grant in that it's not a reimbursement grant. You get funds, you get basically upfront. You get funding upfront. So until you've spent that money and delivered some services, we can't audit you. So we did not, I think we were almost 18 months into the year 1 grants before we conducted an audit. So you'll have some time to get your track record together, to spend your money, to deliver your services, to deliver some reports. Otherwise, we don't have anything to audit. Who does the audit if the grant advocate does not? It is the person who we have one individual assigned to audits. He is an experienced auditor who has made a profession out of doing audits. It really is a specialized skill set. The grant advocate cannot handle a portfolio of 25 organizations, helping everyone through every process, as well as an audit. An audit, I hope you got the idea from this presentation that an audit can be a very time-consuming and in-depth process. So we have a whole separate person to do that. And that person, I don't know how other organizations do it, or how, usually the government has an audit department. And just like a case manager has a caseload, Their auditors have a caseload of organizations they audit, and it's all they do. So right now for Amity, we have one person who has been hired to do our audit process. And I believe they're hired under our accounting department. This is starting to get very JCOD, CFCI specific, and we really did want to keep this more general. So no, not all. In every grant I've ever been part of, we have not, like any organization I've been with, audits are occasional. They usually happen if we are in some trouble with our grant. Usually if we're doing everything just right, if we're reporting on time, if we are adhering to all the things we said we were going to do, we do not get audited. Audits usually happen if you're getting into trouble, if you're late on reporting, if you're not, if your deliverables aren't happening. So more generally, audits happen when you're starting to get into trouble. If you're doing everything perfectly, if all of your reports are on time, if you are meeting your milestones, it's unusual for you to be audited.
I think that's all the questions on auditing, Rebecca.
So too. Let's see anything else.
Awesome.
Oh, so yeah, thanks, Pamela. When I said you would be audited at some point in your life as an organization, you will probably be audited at some point in your life as an organization. You should always be prepared for an audit. And I know there's an accounting or a fiscal audit that happens yearly for organizations. So it's, it's not a 100% for sure, but there's a 90% likelihood that in your lifetime as an organization, you will have to go through an audit.
Awesome. So it doesn't seem like there's any other questions. So this does conclude our webinar for today. Next week, our presentation will be on HIPAA and OSHA, again at 2 p.m. So we do have webinars every 2 p.m. every Wednesday, and you're more than welcome to join us. So again, next week, HIPAA and OSHA, and our latest bulletin that did get emailed out to every CFCI grantee this past weekend does have that Zoom information, which is the same Zoom information that you logged on using today, but it also has July's calendar. And if you have any webinar topics that you would like to see in the future, please email us or let your grant advocate know. We would love to bring other topics that are of interest to you. But if there's no other questions, thank you so much for your time, and we will see you next Wednesday at 2 p.m. Have a great day, everyone. Bye.
Thank you.